To help us help you, we welcome back William Lee, Chief Economist at the Milken Institute. And good to see you again. This October data has, I don't think it's a surprise that they're a little better than expected, but the market reaction appears to be pretty outsized here. Are they right?
Well, everyone was bracing, including me, for being run over by the inflation numbers, because every time the numbers came out, it always surprised to the upside. And so right now, everyone is breathing such a sigh of relief that it did not do that. But don't forget, the numbers have surprised us before with these false starts. There have been several occasions, especially during the spring, where inflation numbers came down consistently month after month. It looked like, all right, we're on a downward trend. And then boom, the summer happened and things reversed, and we had 9% inflation, and the core went up to above 6.5%. So don't call a party yet. Inflation's not over, and the Fed is certainly not ready to stop its tightening rate hikes.
Some of the reports that I've read from experts have said that we might slip into the sort of, it's not going to be 2%, it's not going to be 8%, it might end up somewhere between 4 and 5%. And if that happens, say in Q1 or Q2 of next year, where it's not too hot but not too cold, then what does the Fed do?
The Fed will continue to raise rates. You know why? Because once it stops and allows inflation to become entrenched at 4 or 5%, then it's going to be impossible to get it back down to 2% without a massive recession. And that's the one thing the Fed wants to avoid. Tomorrow's number, watch out for the inflation expectations number from the University of Michigan. If the Fed gets a whiff that those numbers are starting to creep up and inflation expectations start to become unanchored, you watch for a 75 basis point hike just to make sure they convince everybody that they're serious about reducing inflation.
So we talked to a lot of business owners, and yes, everyone has raised their prices in the past, 6, 9, 12 months. No one is going to reduce prices. I don't care what business you're in. No business owner wants to cut prices. Now, they may not raise it as much as before, but as long as wages are going up and the cost of conducting business remains high, they feel pressure to raise prices because they have to make money, right? So this is not going to go away in Q1 or Q2, but I could see a scenario where at least the input prices stabilize. And isn't that good enough given the situation that we're in now? Isn't that a victory?
That's good enough to get the Fed to slow down its pace of rate increases, because what we want to do is to make sure that even though prices are high, they don't continue to accelerate higher. Getting higher is where things are getting out of control. And the Fed lost it back in the 70s, and the last thing Powell wants to do is to lose it again and allow inflation expectations and that wage price spiral to go up to the 6s and 7s. And so as long as we see wages contained below that 5% level, and we see prices start to come down, and that starts to affect people's expectations to say, hey, gee, it may not be so bad. We won't be demanding so much in the way of wage hikes. That's the victory the Fed is looking for.
If you live in a big city in the United States, nearly half the workers are renters, and they've been complaining that rent has been too high. I've seen rents, go up 10, 20, 30% for some people over the past year. Are those rents ever going to come back down, even though we're seeing housing prices drop, but rents are not?
Well, in that fancy part of town that you live in, probably not, because the luxury rents are still going up. But all over, even in New York City, you're starting to see the huge supply of rental apartments come on the market because people couldn't sell them. And that is really causing a lot of rents to come down. Now, the pace of increases is starting to come down. The actual level of the rents themselves may still be high and going higher, but they're going higher at a slower pace. And that's the kind of early signs of the victory the Fed's looking for.
As we get to the end of the year, there's only a few weeks left, and soon it will be turkey time and then Christmas time, and it's the new year, right? So we're starting to sort of mentally think about 2022. What data point should we be looking at to know whether we're right to panic or we're wrong to panic, and we should perhaps be more optimistic about 2023?
It takes at least 3 points to make a trend, right? So what we need to see are 3 to 5 downward releases of CPI, where we see 7.7 this month, we see a 6.5 handle next month, we see a 4.5 handle eventually. That's the kind of trend the Fed wants to see, a rapid decline in the pace of inflation. And if you don't see that rapid trend developing and sort of see us hanging around this 6.5 to 7% level, start to worry that the Fed is going to be even more aggressive.
What does it mean when the Fed says that they are data dependent? Because it's not just about, they said it's not just the top line inflation number, there's also jobs they're looking at. They're also looking at the deflator numbers. They're also probably looking at what's happening around the world in our supply chain environment too, aren't they?
All of the above. And the data dependency, though, is it's not just the data, it's how they interpret the data and what it means for behavior. If people are still have that inflation mentality in their heads, the Fed's going to continue to apply pressure. If people start to lose that inflation mentality and inflation expectations start to come down, and it's measured in kind of awkward ways. The financial markets got measures, the surveys have got measures. If you start to see a consistent pattern where people's expectations start to come down, that's the sign that the Fed is going to be able to pause and pivot and ease its tightening.
Speaking of nice areas, from the City of Angels, William Lee, good to see you, my friend. Thank you.
Where the sun is coming out.
In other news, Twitter